Hi, everyone. Thanks for tuning in to Passport to Wealth, the podcast that takes you on a journey through navigating your finances as a U.S. expat. I'm your host, Arielle Tucker, a certified financial planner and enrolled agent focusing on cross-border planning for U.S. expats. And I'm joined by my co-host.
I'm Savannah Chafin, a CFP candidate, enrolled agent, and self-declared expat tax nerd, here to guide you through the maze of life and finances across borders and share the inspiring stories of fellow U.S. expats who have navigated the process.
Hi, everyone. Welcome back to Passport to Wealth. Today, we are thrilled to once again welcome Emily Haines, an expert in U.S. taxation for expats and the founder of Expat Tax Solutions. With years of experience helping Americans navigate the complexities of cross-border tax compliance, Emily specializes in making tax planning more accessible and stress-free for expats, especially those with connections to Germany. As a CPA, Emily works closely with U.S. citizens living abroad to ensure they meet their tax obligations while optimizing their financial strategies. In today's episode, we're going to be going through some of the updates for the 2024 U.S. tax filing season, which is the tax return that you're filing now, right? E-filing opened at the end of January, Emily, if I'm not mistaken. Mm-hmm. So it's the tax return you're filing now in 2025. So, Emily, thank you so much for being here to talk about tax with me.
Thank you for having me.
And for people who are new to this podcast, we will have Emily on again. She's going to do a little bit of her own personal journey of becoming an expat living in the UK, in Amsterdam, and in Germany as well. She'll be sharing her story, and so we'll link that below when it's available. And I also think it's fun to mention that we met because I reached out to you because I saw your tax return. I was looking at, I look at all of our clients' tax returns. I saw your tax return. I was like, oh, this is someone that I need to know. And then I cold emailed you or something. Mm-hmm. And that's how we got to know each other and started doing presentations together and have really, I would say, become friends. I hope it's okay that I say this.
Yeah.
And so it's just, it's fun. It's fun to meet the people who do a great job and are so passionate about talking about tax because these are my people.
Yeah, thank you. I love collaborating and growing new businesses. Supporting new business growth. And and it's great to, I think tax compliance, which is my wheelhouse, can be kind of backwards looking. And your work is so much more forward looking. And so this is really nice that I can send clients to talk to you about their planning and forward-looking issues, so I can stay in my lane of tax compliance.
Okay, so let's talk about tax compliance because we are meeting in February, so we're just at the cusp of the start of what I like to think of as busy season, right? All the 1099s from the U.S. side have mostly come out. Maybe clients are still working on getting all the reporting for their businesses, but a lot of documents are ready. So clients are starting to think about, okay, I need to file my tax returns. Do I have all my documents? So that started. E-filing, like I said before, opened at the end of January. So that's opened. So as we are in the 2024 U.S. tax filing season, are you seeing any differences compared to last year's season? Or what are some of the major changes you're seeing this year?
Yeah, so far this year, the big changes are just the annual inflation adjustments for foreign earned income credit, for standard deductions. There weren't a lot of big tax changes over the year in terms of tax law, in terms of the forms. So this is really nice when there are a lot of changes. Those changes have to be translated into forms. And sometimes that can slow down when things are available, when they can be done, when they can be filed. So this year, so far, it's smooth. And the foreign earned income exclusion, I believe it's up to $130,000 for, I think that's for 2025. Yeah. It's just below that for 2024. The IRS publishes exchange rates for average exchange rates for the year, which is 0.924. I know that one for the euro off of the top of my head. And so, that's quite a bit of euros if you're taking the foreign earned income exclusion. Um,
Yeah,
in term-
I completely agree. Like when we have basically no major changes from year to year, it makes the tax season just starts like easier, I would say, right? You don't have to like relearn all the instructions and the forms. And so this year, as we file the 2024 return, there's really no changes. I think what will be more interesting to talk about is as we talk about 2025, because we have obviously a new president and the Republicans control the House, the Senate, and the presidency. And the last time we had major tax reform was back in 2017, really, when Trump was in office the first time. And so basically all of those provisions that we have had for the last 8 years now are getting ready to sunset at the end of 2025. And so really we're thinking about, okay, 2024 isn't a huge change year. We'll talk about some of the changes, but it's really 2025. I think that we're all kind of like, I don't know how you're feeling, but like I'm on the edge of my seat right now in 2025, watching what's going on and wondering how all of these executive actions and also just the control with the Republican Party and knowing that like we are going to have tax reform regardless who was in power. I'm really on the edge of my seat seeing how that will actually like play out.
Yeah, so I think there's a really big threat of government shutdowns in March. So when all of the tax reform was passed in the 2017, it was for 2018, they set it up to a lot of it for it to sunset now. So they kind of kicked that can down the road. And now we are at the point where that can has been kicked down the road. And so that has to go through Congress for them to approve either extending things or allowing them to sunset. Things like the estate tax exclusion or cutting in half. So it's around 14 million. Is it going to go down to, is it going to be cut in half?
Yeah.
These things are not, a lot of people will not be happy if they happen. And that is going together with the budget. So, and this is the conversation happening right now of like whether we have one big beautiful bill, which includes tax reform and the budget, or two separate bills where they pass a budget and then separately pass tax reform. And this sets up a big legislative conundrum. And if it's not passed, then there can be a government shutdown in March. And a government shutdown at the height of tax filing season is not good for anyone, because that means that while like the baseline operations of the IRS are going to continue and e-filing will proceed and your deadlines aren't changed and you can't get away with anything as a result of it, having someone to pick up the phone when you call the IRS with a problem is important, and that facilitates getting taxes filed. And when their mailroom is understaffed and your people are mailing tax returns, then that can cause backlog. And so even if the tax changes, even if there aren't, for right this second, a lot of tax changes, I do think there are going to be a lot of process complications coming.
Yeah, and I think we didn't really have a government shutdown in the middle of COVID in the same way, but I do remember during COVID, right, everything slowed down, and I remember like paperwork just got behind 6, 9, 12 months behind. And so, I mean, one of my tips to all of our clients is make sure you're e-filing your tax return. And occasionally I will come across preparers who, for whatever reason, they don't e-file or they can't e-file. And I think that is such a disservice to their clients because, really imagine you're going to mail a tax return that's 200 or 300 pages and hope that the IRS doesn't lose a page when they have, piles of paper. I would be e-filing. I would make sure you're e-filing.
Mm-hmm. Yeah, we definitely saw that during COVID when they had such a backlog of paper and they would lose parts of returns, and then people get notices and then you respond to the notice and the response is to mail your return again. But once you are set up as like owing in the system, you're getting automatic notices from the IRS, and they're taking a long time to process things. And this is just really stressful, even if they're going to eventually sort it out, just to get letters every few months from the IRS telling you that you owe them $10,000, $20,000, even if you don't, it's stressful. And I think when they aren't functioning at optimal capacity, then these things take even longer to clear out. And e-filing, and I would say, especially for somebody who's just going to file foreign earned income exclusion and a little bit of 1099 interest and doesn't have a big need to collect documents and isn't waiting for anything, this is maybe not a good year to procrastinate. And maybe, this is a really great time to just get it filed. If it can be filed, to get on top of it and get it filed. There are a lot of people living abroad who legitimately do not get documents and aren't able to do things until later. And then, we got through COVID, we can get through whatever is coming our way, but it's probably going to be slow.
So I just want to quickly just point out a few of the deadlines, just because I think, just so you're aware of what they are. And I'm actually taking my own personal approach. Last weekend, I never do. This is terrible, right? I'm an IRS enrolled agent. I'm a CFP. I never am rushing to do my taxes. I did my taxes last weekend in mid-February, which I never do. I already have them with our accountant, and I'm like, I want to get these done because I don't want things sitting around and just hoping that someone takes a look. A couple things, I have set up an ID.me account, right? So I can go in online access to the irs.gov website, very easy. Even if you're an American abroad, you can still set up that account. We'll try to make sure that gets linked. That article of how to set up an ID.me account gets linked here. The deadline to pay is April 15th. And now I know we both work with clients who have a lot of foreign tax credit, but there are still many times where you may owe, right? If your capital gains tax doesn't match up either on, selling equity or cryptocurrency or home sale. So if you had something different and you're thinking, I wonder if I'm going to owe, now is the time to talk to your accountant and maybe even just do a rough estimate and get that paid in advance to ensure you don't have additional interest, because IRS interest rate is 8% right now, right?
They reduced it to 7%, but that's not much better.
Okay. Yeah. So we're at 7% right now. And that
they adjust it quarterly.
Yes, they adjust that quarterly. So right now it's 7%. So the deadline to pay is April 15th, whereas the deadline to file, and this is, I think, trips a lot of people up, the deadline to file is June 15th, right? So you get this automatic extension to file, but that isn't an extension to pay.
Right. And so you have interest accruing from April 15th, and there are no failure to file penalties until June 15th. And those failure to file penalties are a percentage of taxes owed. So if you don't owe anything, then, or you owe very little, it'll be small. But if you did sell a home, for example, that is not taxed in Germany, but is taxed in the US, then those late filing penalties can add up to quite a bit.
Mm-hmm. Yep. What are some the FBAR, right? So the FBAR is the foreign bank account reporting. That's a separate filing from the US tax return. And it's a different system. And I always tell people, I'm like, if you want to save money, I'm sorry I tell people this, Emily, I know you're in the business of compliance, but if you want to save money, figure out how to self-prepare your FBAR, because it's really not that complicated. It takes your accountant probably almost the same amount of time to prepare it as it would for you to self-prepare. The deadline for that matches the deadline to file your tax return, correct?
Yeah, it's a bit of a funny one because it is April 15th with an automatic extension to October 15th, and you don't have to do anything to get the automatic extension. So with your tax return, if you want the extension to October 15th, you have to file Form 4868 to request that extension. For the FBAR, it's just automatic. But once again, I think this year, probably more than other years, it might be good to do it. And I also really like doing my FBAR kind of as soon as I can in the year because it's just one of those like, everyone kind of starts the year in January, I think, with a little like, I'm going to get my life together. And that's a great, easy win. Um, Usually you just have to wait for you have to translate dollars translate foreign currencies at the U.S. Treasury year-end rate. So that can take a couple of weeks of into January before that's available. Um, and yeah, it feels good to just get it out of the way,
Yep.
get it filed, taken care of. Don't worry about it again until next year.
I totally agree. And just so you know, I've already done mine and my partners. We're done. We've
Yeah,
knocked that out. So
I did
I
mine
feel real
last week.
I feel really good that is done. I want to talk about two other kind of updates or so the 35 form 3520. Talk to us what's going on with that form.
Yeah, so if you have inheritance or gifts from non-US people over $100,000, there's no inheritance tax on that like there is in Germany, but there is an informational filing requirement, and that has to be timely filed. So by the deadline of your tax return, so it's June 15th. If you get the extension, you get the extension to October 15th. It's a bit of a funny form because it has to be mailed separately to a different IRS processing office. It goes to Ogden, Utah. Usually your tax return is going to, um,
But you can still e-file it. You can still e-file this form.
I'm not sure. I think we mailed them separately.
You did. Okay.
Um, so if they're late filed, the penalties are 25% of the value of the asset that you received. So if you inherited a house worth 500,000 and you file that form late, it can be a 25% penalty. And what the IRS was doing for the past few years was sending automatic penalty notices, even when people. Sometimes, if you have extenuating circumstances, you can send a letter to the IRS with a reasonable cause statement explaining why you did something late, and they'll review it. And they were not doing this; they were just sending automatic penalty notices. Um, and this was causing a lot of problems and a lot of stress. If you're inheriting 500,000, 25% of that is quite high. Um, and this was a big, struggle between a lot of tax lawyers. There were a lot of cases, a lot of tax preparers who were trying to fight these notices. And at the end of last year, the IRS agreed finally not to offer automatic or not to send automatic notices. So they agreed to review reasonable cause statements and to have a stronger process around not automatically sending these penalties. And this is it's a big win for taxpayers and for, common sense enforcement. I think I was at a tax conference and there was an IRS representative there talking about this change, and the room erupted in applause because everyone was so happy that they were, it's a demonstration that they're trying to do common sense, good customer service enforcement.
Yeah, so we talked about 3520, right? Which I mean, $100,000 if you're receiving an inheritance from a parent or spouse or a family member living abroad, that's actually like not a huge amount if you think about it, especially when you compare that to the US. We have this $14 million or almost $14 million estate tax exemption. So this is just an informational form that has a penalty associated to it if you don't file it correctly or are timely. And then we have the FBAR, which again is an informational form. We have a lot of these like in tax, we have a lot of forms that are just purely informational. So we've got the FBAR, we talked about that one. And then the next one I want to talk, what's coming, the BOI. And I just wanted you to give like a quick update on that because I know that's been bouncing around in the courts. I know you don't want to touch this, but what is the current update on BOI right now?
Yeah, it continues to bounce around. It was going to be due, I think January 25th. It got extended until February. There's some court cases. There's rumors that it's going to be extended for a year. I haven't I haven't personally done mine yet. I'm waiting to see what the courts do it, but I do that with the confidence that I am in a
And
position
this
to
is
do it
the
very quickly.
beneficial ownership report, and this is
Yeah.
all for U.S. citizens or anyone who's in the U.S. tax system. If you're living in the U.S. or if you're living abroad, you have ownership of a company, of a firm. You have this additional report to file, which is just, again, purely informational. So I feel like we have so much informational reporting.
Yeah. Yeah, the BOI reporting goes through, it's done by FinCEN, which is the same group that does, or the same organization that does the FBAR reporting. And so it's a similar system. So I think if you are doing your own FBARs, you can probably figure out your own BOI reporting if you need to. We refer that to another firm to kind of manage it. And part of the reason we're referring it out is because we're kind of focused on our own work, and I think it's something that could happen very quickly. So it's changing very quickly, and if you're an owner of an LLC, shares in an LLC in the U.S. or any company form, it's something to keep an eye on and see how it develops, because like the FBAR, like the 3520, it's going to be high penalties for late filing.
Yep. Yeah, and it's something that I've been kind of trying to follow along in our Connected Financial Planning LinkedIn page, just to kind of keep people posted with where we are and like in what appeal, where is it headed, because it is something that has like really dragged out, and it's really been, it's kind of been interesting to watch that in the courts. And I think if I think about the whole theme of the year that we're headed to, or we're currently in, I don't know, it's going to be a year that will be played out, I think, in the courts. I think there's going to be a lot of things that are going to be coming down, a lot of changes. And I think you're right. I think if I looked at my crystal ball, I'm like, are we headed towards a government shutdown? Maybe. It doesn't mean you don't get to, you don't file your tax return, right? We still have to file our tax returns and do our reporting.
Yeah, I mean, a lot of the international tax in general plays out in the courts because, I mean, Congress sits and they make some ideas, some broad stroke ideas about what rules should be. But, when you get down to the nitty gritty, it's like retirement accounts, foreign retirement accounts. Okay, but what numbers do you want in what forms and under what circumstances? And there's a lot of gray area in international taxes because U.S. tax law is set up in line with U.S. business law, with other U.S. laws, with U.S. investment requirements, and those don't line up one-to-one with what's happening abroad. And so you can have something that's like very clear in the U.S., and then you take it over borders and it's like, well, does this apply? Does it apply to this situation? And so you end up with a lot of these things going through courts where, international tax preparers, international tax lawyers are taking a position, and then you wait and see if the IRS challenges you on it. And particularly with the 5471 reporting, which is if you have company ownership, if you in a foreign corporation. And this has grown from, I think, 7 pages to, I don't know what it is now, it's 70 pages. And the instructions are, fill out the form. And then they kind of, people fill out the form in whatever way they fill out the form. And then the IRS kind of gets that feedback and says like, okay, now we'll give you instructions on how to fill this out. We'll clarify our instructions. And then some of it goes through the courts. And yeah, it's definitely not a straightforward adventure.
I think that's why we both kind of love being in these fields, though, because I do think if I was just doing this in the U.S., it would be a little bit, I'd like to think maybe it would be a little bit more straightforward. But it's like every case that we're looking on, it's like, okay, you're living in this country, and how is the U.S. treat that in this country versus you want to go to country B? Well, how is it going to, it could be completely different. And I see that all the time. And it's like, we have all these differences. It is really complex. How do we optimize those differences? And that's where I get really excited.
Yeah, every once in a while I do like a purely U.S. tax return, and I'm like Is that was that it? Where's the fun?
Yeah, yeah. Okay, Emily, thank you so much for joining us again today. We'll be sure to link your company information in our show notes, as well as some of the articles that we discussed. And I hope to have you on again soon because this was really fun.
Yeah, thank you for having me.
Thank you for tuning in. Stay tuned for our upcoming episodes packed with insights and stories to empower your global financial journey. This is Passport to Wealth, where your financial future knows no borders.
The information provided in this podcast is for informational and entertainment purposes only. It should not be considered professional, financial, or tax advice.
We strongly recommend consulting with a qualified financial advisor, tax professional, or other appropriate expert before making any financial decisions or taking action based on the content discussed in this episode.
Your personal financial situation is unique, and a professional can provide tailored advice to meet your specific needs.